Hello, this is Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Friday, May 10th, 2013. Market analyst Paul Bergner joins me to digest a USDA report that gave farmers mostly heartburn today. The report didn't have many surprises, however, and most of the numbers are mere statistical guesses based on average weather, something that's been elusive the last few years. Indeed, this cold, wet spring generated one surprise. USDA cut its trend or normal yield for 2013 corn back to 158 bushels per acre. That's almost 6 bushels per acre less than the yield projected back in February. Still, assuming farmers plant all the acres they planned in March, the crop could wind up a record 14.1 billion bushels. That's not far from the number that I've been working with. USDA's totals for domestic consumption are also close to mine for new crop. The difference comes mostly with exports. The government assumes only a modest rebound in the coming year. The USDA put the carryout for new crop at 2 billion bushels, which would force the average cash price down to $4.70. All that assumes the crop gets planted, however. Only 12% was in last Sunday. Can farmers get half the crop in by May 20th, Paul? And which means more to the market, planting progress or today's report?
Well, right now I'm going to say that planting progress is going to trump today's report. Again, as mentioned earlier, really we're looking at statistical estimates at this point and really not much survey information. So I'm a little hesitant to throw an awful lot of weight at today's report, and I want to see what Monday's planting progress numbers really look like. My expectation is somewhere in that 30 to 35% planted on Monday. Can we get to 50% by May 20th? I think that will happen. Unfortunately, I think we'd like to be 75% planted by May 20th, and I'm not sure we can get that far. One of the things that jumped out at me from the report today was those demand numbers, and I think we're looking at a 21% increase in feed, about a 75% increase in exports, and a jump in ethanol. Prices are going to have to be a little lower to get all of that to happen, and the way that that's going to happen is that big crop. So how much lower do those prices need to be? My expectation is we may actually see some numbers in the fours to get those kinds of demand numbers to come back.
The USDA also projected a big increase in soybean carryout for 2013. And as was the case with corn, the cause is increased production both in the U.S. and around the world. Here in the U.S., the government stuck to its big yield of 44.5 bushels per acre, which would boost production to a record 3.4 billion bushels. Brazil and Argentina would also boost output. Chinese imports would rise dramatically by more than 365 million bushels, but U.S. ending stocks would more than double under the government's scenario to 265 million bushels, sending average cash prices down to $10.50 a bushel. The forecast kept November futures under pressure, but old crop held up better. USDA forecast no change to 2012 carryout, with a red-hot cash market briefly taking May futures over $15 after the report came out. May futures go off the board on Tuesday. How long do you think this old crop rally can last, Paul? And is it enough to support new crop prices too?
Well, right now I think we seem to be holding things together a little bit. This old crop rally to me is something that we may actually see fairly strong prices well into the year, because we just, according to all the numbers that we keep looking at, the beans are just not there to continue on at the pace that we're going. So we could see some strength out there and hold that. I think on the other side, whether or not the new crop stays tied to that old crop may depend on how much corn we can get planted and whether or not we can get that spring wheat in the ground. I think those two numbers are going to be the key to holding on to a $12 new crop price. So as we watch that planting progress, I think that's going to be the big one. If we shift some acres to soybeans, which historically we have not done a lot of. I think that a big shift to soybeans is something we talk about regularly when we have a tough spring, but we really don't see that happen very regularly. So if we do see that big shift, we could easily move under that $10 level, and that will be a shock to that soybean market.
Well, USDA's estimates for corn and soybean production were mere statistical guesses, but the agency's first monthly forecast of winter wheat output today was based on actual surveys. And as expected, it showed reduced hard red winter wheat production after a tough fall, winter, and spring on the plains. Other classes fared better, bringing total output close to 1.5 billion bushels, which was close to trade guesses as well. The agency is still using normal yield and acreage data for spring wheat and durum, which are both a big question mark. With the outlook lower, the government said demand would fall too. It projected lower feed usage due to cheaper corn prices, with exports falling along with the drop in the U.S. share of world production. The result would be a small reduction in ending stocks to 650 million bushels. Though stocks would fall, so would prices, with the average cash price at $6.80, a dollar lower than this year. New crop futures held April-May support lines at all three exchanges on Friday, despite heavy losses. What did you think of today's report, Paul? Is it time to price more wheat if the market can't hold?
You know, I'm actually at a place where I think maybe pricing some of that wheat is probably a good idea. I think, though, it really depends on whether or not you have wheat to price, and it depends on then what your location is. I think that hard red winter wheat projection to me was a little too optimistic. It was above our number, and I'm not sure that our number is maybe not just a touch optimistic. To me, we're gonna get closer to 700 million bushels maybe than to 800 million. So that's a number that to me seemed a little bit strong. And I think winter wheat in general might be a little optimistic. We're starting to hear some dry weather issues in Oregon and Washington. And I'm starting to be a little concerned about quality of wheat in the soft red areas as we continue to have that rainfall out there. So I think there's some things that we really seems a little optimistic for me. At the same time, if I could get some wheat priced above $7, I'm thinking about getting a little priced here to keep that 7 out in front of that number. I think the other one that's out there is that spring wheat number. Whether or not we can get that crop in the ground, I think we're facing the same issues in spring wheat country that we are in corn, and so I think there's something to be watched there. We'll see what that looks like on Monday when we take a look at that crop progress report.
Well, thanks, Paul. We'll be back next week to look at that planting progress, along with the potentially volatile expiration of the May futures on the next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash, or we'll have to sell you